Hello students, my name is Prachi and in today's lecture video we will discuss in another important topic of class 12 macroeconomics, that is banking. And in this lecture video we will discuss the functions of bank and what is central bank and what are the functions of central bank. So let's get started. So students, first is what are the functions of bank. Students, functions of bank is categorized into two parts. First is primary function and second is secondary function. So in primary function, we will discuss what is a primary function. So first is accepting the deposits and granting the loans or advancing loans. So in accepting deposits, bank can accept the deposits through current account or through fixed deposits or through saving deposits. In current account, the customers are primarily or basically are the businessmen. So the depositor in this account, current account, get a check facility or but they doesn't enjoy the interest rate on his or her amount, and the other is fixed deposits or the time deposits. Students, fixed deposits and time deposits are those deposits which are deposited by the person for a fixed period of time, for a long period, generally for a long period of time. On this account or on this fixed deposits, banks are generally provided a higher rate of interest, but doesn't provide the checkable facility or a check facility. And the other one is saving deposits or saving account. Saving account or saving deposits are the combination of current account deposits and fixed deposits. In this account, bank provide the overdraft facility just like current account and interest rate facility just like fixed deposits account. But there are certain limits. On fixed deposits, bank provide a certain amount of interest which is generally lower than the interest rate of fixed deposits, or provide a overdraft facility to their prime customers or respectable customers only. And the other one is secondary functions. In these secondary functions, bank provide the overdraft facility. Overdraft facility like आपके पास 5,000 रुपए हैं और आपको नीड 50,000 रुपए की है या 10,000 रुपए की है, लेकिन आप बैंक के प्राइम कस्टमर्स हैं, तो बैंक आपको ऐसी फैसिलिटी दे देती है कि आप क्रेडिट कर सकते हैं, दैट इज ओवरड्राफ्ट कर सकते हैं. द अदर वन इज discount of bills. You have learned this thing, bills of exchange, in your accounts topic also. So bill discounting, I hope you know. The other one is agency function. The bank act as an agent on the behalf of customers, like bank pay or receive something in return on the behalf of customers. And the next is general utility. In general utility function, bank provide some extra facility to their customers, like locker facility, like traveler's check facility, letter of credit, and so on. Other is advancing loan. The deposits received by the banks are not allowed to remain idle, so bank keeps some certain cash reserves, and the balance is given to the needy borrowers, and bank charge a heavy interest on their loan amount and earn some profit through this interest only. So this is the primary function of the bank, and the other is secondary function. So first is overdraft facility. The overdraft facility is generally given by the bank to their prime or the respectable consumers only. And the other is discounting of bill or bill discounts. This is the facility given by the bank to the holder of the bill of exchange, in which the holder of bill of exchange can discount their bill before the maturity date. And the other is agency functions. In some cases, bank act as an agent on the behalf of their customers. Like bank can purchase or sell foreign exchange on the behalf of their customers, or bank can purchase or sell security from security market on the behalf of their customers. And the other is bank makes some payment and collects some amount on the behalf of the customers. These are the agency functions which are made by the banks. And the other is utility functions. And general utility functions, like the bank provides locker facility to their customers, and the credit letter of credit facility, traveler's check facilities. These are the general utility functions that are performed by the banks. So this is all about the primary and the secondary or the functions of commercial banks. The other is central bank. So students, what is central bank? Central bank is the apex body or the supreme body that control, operate the monetary function of an economy. Students, the Central Bank of India is Reserve Bank of India or RBI, which is established on 1st of April 1935 under the Act of RBI 1934. So this is all about the central bank. Students, the next topic is the functions of Central Bank or Reserve Bank of India. So the first and the foremost function is currency authority. So currency authority, RBI has the sole right to issue or print the currency of India. Only 1 rupee note or coins are issued by the Government of India, the Ministry of Finance. So other currency is issued by RBI. Next is banker to the government. Students, RBI act as a banker to the government. When government required money, they can borrow from RBI. Next is banker's bank or supervisor. Students, RBI act as a bank to the commercial banks, to all the commercial banks in India, and RBI also supervise the activities of all the commercial banks of India. Next is custodian of foreign exchange. Students, all the foreign exchange transactions in India are routed through the RBI only. Next is controller of money supply. So students, all the monetary policies are the policies which is made by or regularized by the RBI only. So through this, RBI control the money supply of an economy. So what is money supply? Students, money supply is the circulation of money or the flow of money in the economy. Students, through the repo rate, reverse repo, cash reserve ratio, or through the statutory liquidity ratio, RBI regulate the money market in an economy. So what is repo? What is reverse repo? What is statutory liquidity ratio? We will discuss in this lecture. Students, the next topic is the method of credit control by the RBI, or the measures that RBI taken to control the credit system or the money flow in an economy. So RBI can control the money supply or money credit in an economy through two measures. The first one is quantitative measures and the second one is qualitative measures. Students, through quantitative measures, bank regulate the volume of credit, and through qualitative measures RBI regulate the direction of credit. So the method of quantitative measures are repo rate. Repo rate is the rate at which RBI lend money to the commercial banks for a shorter period of time. RBI lend money to the commercial bank for shorter period of time in repo rate. And in reverse repo rate, it is totally opposite of repo rate, the rate at which RBI receives the deposits of commercial bank. And the cash reserve ratio, it is the minimum percentage of net demand and time liabilities that to be capped by the bank with the central bank. Bank has to keep the minimum rate, minimum percentage of net demand and time liability with the RBI. And the next is statutory liquidity ratio. Statutory liquidity ratio is the percentage of net time and time liability which commercial banks requires to maintain with themselves only. And the next one is open market operation. So what is open market operation? In open market operation, RBI buy or sell the government security in the open market to the public or to the commercial banks. The next one is margin requirement. Margin requirement is the difference between the loan amount of the borrower and the value of security offered by the borrower against the loan. Suppose the borrower borrow 1 lakh rupees and the security amount or the collateral amount is 1,50,000. So the difference between the value of collateral and the value of loan is a margin requirement. Next is the moral suasion. Moral suasion is the announcement that RBI made the RBI expected the cooperation of the bank in the implementations of credit policies. So moral suasion is the expectations that RBI bonds to the commercial banks. Next is selective credit control. Selective credit control gives, the RBI gives the direction to the commercial bank that to give or not to give credit to a certain person to a particular sector. So this is all about the banks, the functions of banks, central bank and the functions of central banks. So I hope you like this video. So thank you so much for watching this.